Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on Friday, 9 September. I gave the forecast for this week, 5th to 9th of September on 6th, Tuesday. And we are now going to review the forecast, what I have given it. That is on Friday. And we'll be able to see that what I explained on Tuesday has exactly happened. And if you look into the live market quote page, Euro went up from the 1.11 to 1.13, started sliding now. GBP also went up to 1.33 and then 1.34 and then started making the slide. USDN from 104 it came down to 101 and then started recovering to make further slide today towards close of the US session. Then in the case of CHF also, they made the slide from the 98 to 97, 96.50 area. Then in the case of Canadian dollar 1.30, they dropped it to 1.28 and then come to the middle level. So Australian dollar, they gained up to 0.77 and then started making the slide. So as I explained last week, on Tuesday, that the players intend to make the contrarian moves in order to handle the crosses. Exactly, they have done that. So let us review the forecast, what I have given it, and also try to find out what could be the possible moves in the market in coming days. And many people are just speculating or making various derivations. Ultimately, reading the intentions of the players will give us the insight which pair they are handling at a given time. That will give the great trading opportunity, because it is next to impossible to do all the chart studies in all the currencies and then try to take a timely decision to enter into the market. Instead, you can look into the live market quote page, both the majors as well as crosses, and find out whether they are making the contrarian move or the regular USD gaining or the USD weakening move. Today they are just making the USD weakening move. Euro is in positive net change, GBP is in positive net change, Australian dollar is in positive net change. But the variation is there in the pips. So here you find Euro is about 18 pips positive net change, GBP is about 28 pips positive net change, whereas Australian dollar is 2 pips positive net change. Similarly, you come across the negative net change in the denominator currencies, showing again the USD weakening move. Of that, USDN is showing more negative net change of 39 pips. Followed by that, you come across Canadian dollar about 15 pips. Then CHF is showing a nominal 10 pips negative net change. So this way they bring in the variation, even though they are showing the USD weakening move. Slowly during the day, they are expected to change the scenario and try to handle the crosses. So if you got more doubt, or if you want more clarification or explanation, or what could be the possible moves, etc., you can contact me through my email ID, dr@i-knowindices.com, or Skype chat ID, iknowindices@hotmail.com, so that you will be able to contact me through the Skype chat and get instant reply. Then my website is www.i-knowindices.com. You can visit there and find out how exactly my market reading and my trading system is being formulated. So we will come across, first of all, the forecast, what I have given it. So they made the rise during that of Tuesday and Wednesday, started making the slide from that of Wednesday, that is day for yesterday, from that of the European session. Then slowly they just formed up and made the slide yesterday. In the case of Euro and GBP, they are holding low, but in the case of Euro, they gained the level to 113, and then started making the slide. That they have done it mainly keeping low 1.3293 area in the case of GBP and keeping high in the case of Euro 1.13. Thereby they were able to handle the Euro GBP cross on the upside and making upward stopping. And now they started sliding by making the slide in the case of Euro more and gain in the case of GBP more. As a result, you find Euro GBP cross is being handled on the downside. So you find USDN also they dropped. So how cleverly they have done it. They initially made the drop in the case of USDN, creating the impression that all the currencies are going to show the USD weakening move. But subsequently they gained the level in the case of GBP and dropped the level in the case of Euro. So people were really confused what sort of move it is. Then later on, they gained the level in the case of Euro and dropped the level in the case of GBP. And thereby, they were able to handle keeping low USD-Yen. They alternatively made the up and down moves in the case of Euro and GBP. As a result, we found that European crosses are handled as well as Yen crosses are handled. And now, today being Friday, they will try to make some more squeezing on the downside in the case of the crosses. So that is what they are expected to make a dip and then rise during the Japanese session and then swing and firm up during the European session. In the case of Euro and GBP, start at that time, USDN is expected to come down to 100 and 100 level. Then later on, they are expected to slide Euro and GBP also during the US session for the weekend. So they just make all the drops in the case of all the three majors and induce the traders to liquidate their long positions because they created all along the USD weakening move. And then when the traders have taken the buy position, the players drop and induce them to sell at the lower level. So when the traders lose, the players gain. And they sold at the higher level, holding high during the big beginning time. And they are trying to buy back during the weekend time by holding low. So when the patience is tested to that of the traders, then automatically the traders shed their positions because of the margin fear. And next week, they are expected to make the week beginning false move. That will be the second week of the September. They will make a downward false move on Monday and start gaining the levels in the case of Euro and GBP, in the case of USD-Yen, and then followed by that of Euro and GBP. And then later on, they will gain the levels in the case of USD-CAD, Australian dollar, and also USD-CHF. That way, they are expected to alternatively gain the levels in all the four majors and two commodity pairs and continue the contrarian move. This way, they will be able to squeeze on the higher side the crosses. So they squeeze the crosses on the lower side, induce the traders to liquidate the long position. So when the traders don't have the long position, when the market started gaining, the crosses started gaining the level, they have no other option than to wait for the resistance to be reached and take sell positions. Then the players squeeze on the upside and induce them to go in for a short covering. So this is the play they do every time, but still the traders are being confused by various analysts, knowingly or unknowingly, that the market is in, technically it is overbought, or technically it is fundamentally it is USD weakening move to continue, and this sort of thing. They alternatively give the information to that of the traders, and thereby the market sentiments are created. Once the market sentiments are created, the traders start committing the positions freely. But relatively, when compared to that of the previous years, you find low volume in the market. And because of less participation of the traders and also the institutions, how long they can lose money. So obviously the institutions have also become cautious. As a result, you find the players take prolonged time in doing the consolidation, and they gain the level and induce the traders to buy after the gain then drop the level, induce the traders have taken the high level long to liquidate and turn seller, and then again gain back. This sort of wide range swings they are continuously doing, and that scenario should slowly change from next week, and then later on you'll come across the the specific upward shift in trading zone is expected to happen. Then Euro GBP as well as USD are expected to make considerable gaining moves on the upside. Now, this slide shows the levels in which the currencies are expected to swing in this particular week. Euro from that of 1.1140, they gained up to 1.1327 and currently holding around 1.1280 after forming 1.1327 yesterday, and they are expected to make the small firm up to 1.13 and then start making the slide during the US session. So they may not be able to gain more, but the low they are limited. They are not breached. In the case of GBP, they came down to 1.3285 even though the estimated low was 1.3225, and again they are not gained to 1.35. They went up to 1.3443 and started dropping. In the case of yen, when it was around 104.13, the estimated low was 100 and they came down to 101.22 and then started gaining to 102. And for Friday weekend, they will make a downward squeeze, induce all those holding long position around 103, 104 to liquidate during the weekend. So, and then they will buy at the lower level by making the downward stop and hit the stops. And once they make further downward move, automatically the margin fear will come and the traders will liquidate the long positions in the yen process. Then yen and yen process. Then in the case of CHF, they came down little lower, below 97, came down to 96.49, and they went up to 98 level and simply holding around 97 in the middle level. In the case of Canadian dollar, 1.2827 they came down to. The estimated low was 1.2875, and then they went up to 1.30 level. So they are just making a narrow range swing. In the case of Australian dollar, the estimated low was 75.25. They came down to 75.51 and then started gaining the level to 77.32 and then started making the slide. So you can understand that how these mathematically calculated levels are being respected by the market. So this actually implies that the players do a very systematic upward and the downward stop, and only thing is we need to read them beforehand well. Then we'll be in a position to take appropriate position trading decisions, making about 100 to 200 pips profit in single trades. Now we will do the market reading for today. So Euro was around 1.11 level on Monday, Tuesday, and they have gone to 1.1259 as the low, and above that of 1.11, and they went up 1.1280 is the high. Then they are just breached the high by about 3 pips and come down as a brief upward stop, and probably they will make one more stop and during start of the European session to 1.1299 or 1.13 level, hit the stops on the upside and start making the slide. In the case of GBP, they have been trading around 1.329197 level and came down to 32.93, the same level. Even though they went up to 1.34, they did not sustain there. In the case of yen, they were holding around 103.69, 104.13 and came down slowly to 103.38 to 103.80, and then now you find yesterday they came down much lower, 101.24, and now you find at 101.97, 102.50 a quick upward stop and started making the slide, holding around 102, giving the impression to that other traders it could go up. They will just make a small firm up and start making the slide after slowly making the slide in the case of Euro and GBP. Then in the case of CHF, when they were around 98 level, they came down yesterday to 0.9649, and then they are holding around 97 level. So it's a narrow range swings are seen. And in the case of Canadian dollar, from the 1.30 area, they came down to 1.28 area, just about 150, 200 pips, and then started going to the middle level 1.29. In the case of Australian dollar, slowly they made the gain, went up to 0.77 and then started making the slide. So you find the players have really this is the level in the case of Australian dollar, which was not visible when I was showing it in the slide show mode. So 76.36 is the low and 76.57 is the high. They not breach the low or the high. I forgot to update the levels. So now I'll probably give the live call. So we can take a sell limit in the case of Euro 1.1298. They are making a brief upward stop and exit 1.12115 and sell stop 1.1334. And in the case of GBP, they are expected to make only a small slide of another 50 pips. So it will be 32.56, 33.67. Buy limit and sell limit, whichever comes first, we can take the trade. And keep a buy stop of 1.3410 and sell stop 1.3212. Yen, they are expected to make the quick slide, so let us not take any position because they will quickly make a firm up and then start making the slide. One has to be very careful while taking the sell and keep the hedge order and also keep stop at entry. They will make a more volatile move and finally make the drop. Similarly, in the case of Australian dollar, $96.21, when they make a downward stop and we can take a buy and then close around 76.70 and keep the hedge order 75.80. So these are all the recommended trades for today. We'll make a note of it. Okay, there is a question from Grace. What is your view on oil gold for September, the coming weeks? See, as I explained, when oil was at the bottommost level, that they are buying it, inducing all other traders to get the feel that oil is not going to gain, gold is not going to gain. And then subsequently, when gold was trading around 1100 level, people were really bearish, and probably the analysts were telling that it can go to 1000, but actually they accumulated all the position and come up to 1300 level, and now you find that 1305 they are keeping it as a strong support and going up to 1350 in the case of gold. Similarly, in the case of oil, they are just gaining up to 40-45, and they are expected to gain more levels in coming days. So you'll come across the commodity pairs will also make strong USD weakening move as well. Oil and gold will become stronger. So we could come across oil again gaining to $70-75 and also gold to $1,450 probably by November. And expectations of the New Zealand dollar. Now, New Zealand dollar, which is moving in tandem with that of the Australian dollar most of the time. But sometimes it will move ahead of Australian dollar in order to handle Aussie New Zealand dollar cross, and sometimes it will be lagging behind. So that from time to time we have to carefully catch it. But overall, New Zealand dollar is also expected to gain the levels. Currently, it is around 74, and slowly it will be gaining the level to 75, 76 in coming days. As you see that Australian dollar, they are making either way swings, but in the case of New Zealand dollar, less drop, more gain moves are seen. Any other question, please? If there are any question, then I'll be willing to answer to those questions. Then this is the chart showing the market timings. So you come across the 3 sessions of the day, Japanese, European, and US sessions. And also the timings are all mentioned in terms of GMT, the 24 hours market cycle. And if you follow this, you will be able to easily understand the market and try to trade accordingly. There is another question. From quote page numbers, how do you determine the direction of the move? Okay, I explained it many times. See the quote page, we look into it, for example, New Zealand dollar, as you are asked the question. Now it is in positive net change during that of the Japanese session. And the numerator currencies are expected to swing and gain during that of the Japanese session and form up during that of the US session. And European session, and start making the slide during that of the US session. So when you look into that of the net change, you can understand how far they are gaining the levels. And once they gain more than 75 pips, they will not reverse it. And if they gain up to 75 pips, there is a great chance for them to reverse it when they hold at that level. So if you look into that of the net change of the major as well as the corresponding crosses of New Zealand, Aussie New Zealand, and other New Zealand crosses, you'll be able to easily understand which pair they are handling at a given time. Let me explain to you with the help of Euro to start with as a simple mechanism. In Euro, you find it is showing 23 pips positive net change. So that means it is in the gaining mode. And now you take the crosses, the Euro crosses. Here Euro Yen, which is in the negative net change, because Yen has made more dip when compared to that of Euro. So as a result, it is making a nominal dip. And in the case of Euro GBP, which is showing negative net change, because Euro is showing less positive net change when compared to that of GBP. So how they are handling, you can easily read it and find out where they are going to take it, either on the upside or on the downside. Now, when they are going to gain the levels, so automatically they will continue the trend during the session. So GBP is expected to gain more when compared to Euro. As a result, Euro GBP will come down. So with the help of the net changes, whichever is making the maximum net change, that will make move first. Then GBP will move first. Later on, Euro will gain nominally, and Aussie is expected to gain lesser. That way, we'll be able to identify it. So I explained it in my Tracking the Forex Market Together webinars. So the recorded webinars, if you go into the details, we'll be able to really understand well. Otherwise, every month I give the Tracking the Forex Market Together webinar. I'll take more time because that will be for about almost 3 hours. So I can explain to you live how we can predict and how they are making the move in tandem with that of our expectations. And the long-term moves, like I was giving on Tuesday, that they are going to make a drop because Monday I was not available. Tuesday I gave the webinar and explained that USD and they are going to drop, and Euro and GBP they are going to gain and drop. Exactly, they have made it, and those things are being derived based on the forecast algorithm. So market is predictable. Only thing is we should know how to predict it. And if you simply look into the conventional statistical analysis and fundamental analysis, we will get trapped. And that is why you find when the various analysts give their forecast, invariably they use modified systems. So they don't use all the conventional system. They say that I am going for the Bollinger curve, I am going for the Fibonacci retracement of various nature, I am taking 2 or 3 of the simple moving average or exponential moving average, etc. They try various combinations of the statistical analysis, which are really irrelevant. Basically, such statistical analysis are not at all correlated. And if you simply correlate that way, using the statistical, various type of statistical analysis, it is something like keeping a person 50% in steam and 50% in ice and say that he is enjoying the warmthness of 50 degrees. But actually he will be getting charred on one side and getting freezed on the other side. So statistics, we should know how logically we have to use it. And we should not just like that use various statistical combinations and say that I like this statistics, I like this, and they are all nothing but subjective explanations. So can the statistics be based on our likings and based on our sentiments? No, not at all. So the statistics is a science. So a science is the one, whether you like it or not, it should function. But unfortunately, what has happened, the players try to pretend as if the market is following such statistics. And then later on, once the sentiment is created in the market with the help of such statistical explanations, the traders commit positions. Then immediately the players give an alternative sentiment in the market in the form of a rumor or in the form of an explanation for the fundamental analysis. There might be a situation wherein there is no rise in interest rate decision. They will simply say that, oh God, thank God, there is no reduction in the interest rate decision, so the market has gone up. So it will be a scenario unchanged, but they will give it interpretation depending upon the traders' open positions, so that the traders get surprised. And you know that non-farm payroll last week, which was less than expected. Everybody thought that Euro and GBP will gain, and they just enter long position after the gain in the case of Euro and GBP. What they had done, they simply made the drop in the case of Euro and GBP and gained in the case of USD and in this week. So they create the market sentiment and act against that of the traders. We still continue to follow the technicals and the fundamentals, and you will invariably, the going might be good for some time, and suddenly when they make a alternative move, we will get trapped and lose all the money what we have gained. So ultimately, people might say that I'm using different algorithm, but they don't test it openly in the market by giving the forecast on Monday and trying to test it on Friday and see what happened to that of the forecast. So if it is time tested, then it will be easy for the traders to follow. And simply if they say using sophisticated ways, sophisticated words, and say that the earning is fantastic and you get about 15%, 20% and 25%, this sort of explanation they give, what is a drawdown and those things, they simply manipulate and give the figures to that of the traders, and the traders think that that might be a great system and lose the money. So ultimately, I have seen in my association with the FX Street for about 16 years. In 2001, when FX Street started, I was the first contributor there, and from there onwards, I've been seeing before that also, through other websites, I was doing it. At that time, I noticed so many analysts came into the market, and so many of them said that they will manage their account, etc. And subsequently, I find hardly a couple of analysts still remain in the market. The rest of the analysts, they simply wound up their show because they themselves become demoralized with regard to the market moves. So if anybody thinks that it is very easy to understand the market by using technicals and fundamentals, they will have a very big setback. But those who use the common sense, when it is cheap, you buy. When it is expensive, exit out of that. They will continue to earn money from that other market. And because I interacted with many of the dealers in banks, and when I discussed with all those people, the dealers in the terminals, trading terminals, they simply say that we follow the technicals and fundamentals, and finally we see the logistics in it. When it is cheap, we buy. When it is expensive, we exit out of the positions. That's what they say. And that they call it as a gut feeling. So you come across that invariably people are able to realize and use their common sense and realize that when the market is expensive, there is no point in buying. But technically, it will say that the market is in oversold condition, so automatically it will go up. So keep in mind that whatever be the type of analysis we do, there might be an element of error associated with that. At that situation, the trading strategy alone will be able to help us. Then the last question. What is the role of the initial market reading on the market direction? So the initial lows and the highs, what I have noted down, if you attend the Tracking the Forex Market Together webinar, which I give once a month, you will be able to understand the initial lows and the highs are very essential for us to understand what is going to be the direction within the day, whether they are going to continue to gain the levels or continue to drop the level. We'll be able to predict beforehand, accordingly take position. When they make the drop below that of the initial low, stay there for more than 30 minutes in the session, then you will come across that more than 2 hours, if they hold below that of the initial low, then they will make further slide. We can take 100% with 100% confidence, sell position, then there will be a further slide. With the help of the live market code page, we can read easily with the help of correlating the levels and the time frame. But in the chart, you come across, it is being displayed either 5 minutes chart or 10 minutes or 15 minutes. You find the chart candles are formed which are delayed. And as a result, you will not be able to identify the quick market reaction, pip by pip market reaction, and enter into the market. We can do the analysis with the help of the chart and say that, okay, this is what likely to happen. If the market breaches this level, it can go down. If it breaches the other level, it can go up. Like that, we can give either way forecast. And after that, we can give the market commentary. It has followed the Fibonacci retracement, or pivot points, etc. But beforehand, we should be in a position to give, and that will be helpful for trading. Simply giving the market commentary after the event is of no use, which is of academic interest, and the traders are not at all benefited out of that. And invariably what happens after reading the comments, etc., the traders develop the sentiments, and once they develop the sentiment, okay, market is going to be bullish, fundamentally the US economic data is negative, and so obviously euro and GBP will go up. That is how they develop the fundamental sentiment. Based on fundamentals, they develop the sentiments and get cheated once they take the higher level buys. So we have to necessarily read the intentions of the players. The players are the one they are trading against us. So we need to read their intentions rather than trying to indirectly find out what could happen to the other market. Anyhow, we'll discuss during Monday webinar. I will come on Monday, 12th September, and give you the forecast for the rest of the week. And that is 12th to 16th of September, and also give you the market reading for the day. Then we will take up from there how exactly the players are expected to make further moves in the market. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and you people for your kind presence and understanding the true things which are happening in the market, which may not be discussed openly elsewhere. But I want the traders to be objective, understand that it is a man-made market. In the man-made market, men act against men, and obviously they can make a higher level buy or a lower level sell only with the help of the bank terminal. So the big players use the bank terminals to squeeze the traders on the upside as well as on the downside. And such quick moves are false moves. We need to understand that such moves, they make it to create the fear and act against that of the traders. And when the traders sell at the lower level in a distressed condition, the players buy. When the traders buy at the higher level after the spike, the players sell to them. This is what they do. They buy low and sell high, whereas they induce all the traders to sell low and buy high and lose their money, because all the traders come to the market to earn money. In the process, they lose and become expert in technical analysis of no use. Thank you one and all. See you on Monday.